Hey everybody, John Skiba here from the Consumer Warrior YouTube channel. And in this video, we're going to talk about Chapter 7 and Chapter 13 bankruptcy and how they can make buying a car, even a brand new car, a whole lot cheaper. But if this is your first time here to my YouTube channel, please go ahead, click subscribe, check on that little bell. That way you'll be notified each and every day when I put out new video content that'll help you deal with serious debt problems. Let's talk about car loans. I'm recording this in 2023, and car loans have come down a little bit. I can tell you in 2022, car loans were out of control. They were through the roof. They were totally inflated, crazy expensive. I know this not only because I'm a bankruptcy attorney here in Arizona, because I bought a car in 2022. My wife's car went, kaput, and we had to go and get a different car. And we walked into the dealership, and I remember the salesman said to me, just so you know, vehicles are difficult to get right now, so there is a $5,000 premium that we're putting on any vehicle that's going out the door right now. I went back and researched this. They said all the dealerships were doing it. They said that the manufacturers, Ford, Chevy, all that they were punishing dealerships for doing this, but they didn't care. They were making a ton of money. They knew it, so they were increasing and inflating the price on the vehicles. And what that resulted in is there is a ton of loans out there right now that have bad interest rates that are crazy high as far as the total amount of the loan and high monthly payments. I am routinely seeing car payments in my bankruptcy practice here in Arizona. I'm routinely seeing monthly payments that are either approaching $1,000 a month or over $1,000 a month. And these aren't fancy sports cars or anything like that. Often truck payments like an F-150, something like that. Those have been very expensive. But I've seen just regular kind of mid-size SUVs that are approaching $1,000 a month. And then we're routinely seeing 72-month loans and even longer, which is troubling because a lot of vehicles aren't even really engineered to last that long. All of this kind of perfect storm has come together and made vehicle loans a big old mess. And so what I wanted to talk about in today's video is how, if you're considering bankruptcy, how bankruptcy can actually help you to reduce the amount that you're paying on that loan, make it a better overall situation so that you don't have a bunch of negative equity, so you're not upside down in it. And then also we can talk about if you're going to actually, maybe you're deciding, hey, I made a bad choice with this vehicle. I'm just going to get rid of the thing altogether. So let's talk about Chapter 7 first. What we're going to talk about first is a process called redemption, or redeeming personal property, redeeming a vehicle through the Chapter 7 process. What this is the bankruptcy code states, look, if you have a vehicle, let's say that it's upside down. Let's say that you bought the vehicle, you owe $50,000 on it, but right now it's only worth $28,000. What you can do in a Chapter 7 bankruptcy is you can redeem that vehicle. And what that means is that the court or the law will allow you to pay the value of the vehicle rather than what you owe on it. So you can see that could be a pretty big savings for you. If you owe $50,000, it's only worth $28,000. If you were to redeem the vehicle through a Chapter 7, you only pay back the $28,000 instead of the $50,000. So immediately you have $22,000 savings just right for going through that process. But here's the catch, is you have to pay for it in a lump sum. You've got to pay for it in full. So you're saying, John, you brought me all the way there and then you destroyed me because I don't have $28,000. I'm going through Chapter 7 bankruptcy. There's no way I could do this. So here's where there's kind of a cool thing to do that we can kind of bridge the gap. There are other companies, other banks that attorneys like myself work with. I don't have any affiliation or connection with them. It's not one of those things, but it's something where I use a company called 722 Redemption. I believe they're funded by US Bank. They could correct me in the comments if I'm wrong by that. But what 722 Redemption is they are a financing company where they will loan you the $28,000 so that you can pay off the lender that you owe on your vehicle in full. You can redeem it, get it at that lower total amount, and then make payments to, in this case, the 722 Redemption would be the new lien holder, the new loan company that you're working with. Now, I know what you're thinking. Hey, I'm in a Chapter 7 bankruptcy. I'm sure the interest rates are out of control, and it's not going to make a whole lot of sense to do this anyway. Here's where the court does help you out. This loan, this redemption process has to be approved by the court. The court has to sign off on it. We have to disclose interest rates. We have to disclose monthly payments, total amount that's going to be paid on the loan, and really what the overall savings will be to you for going through the redemption process. And the court is going to look at it. If it's something where you're not going to save any money, they're not going to approve it. I, as a bankruptcy attorney here in Arizona, when I look at the numbers that I get from companies like 722 Redemption, I look at it and if it's something where it's not a good deal for my client, we're not going to do it. But I can tell you, I have seen clients, particularly in this current environment as it relates to vehicles, literally save tens and tens of thousands of dollars on these really inflated car prices that they bought a while ago. It's a way to save a lot of money. It's a way to reduce the amount that you're paying on your vehicle. You can keep your vehicle, you can stay in it, pay it off, keep it, and then in the future, if you buy another vehicle and you trade it in, you're not rolling all that negative equity, where you get in that endless cycle, rolling bad loans into a new loan, and it just creates this never-ending cycle of horrible loans. Redemption in a Chapter 7 bankruptcy is a way to reduce the amount that you have to pay on it and make it a much overall better situation. Now, before I jump into the Chapter 13, I do want to talk about the Chapter 7 bankruptcy, because normally in a Chapter 7, if you want to keep your car, you have to continue to make the payment on it. However, you can elect to surrender the vehicle through a Chapter 7 process, and then you wouldn't owe anything on it going forward. So let's take that same example. You have a vehicle, you have a $50,000 loan on it. Let's say that your monthly payment's like $800 a month, and you're just saying, you know what, I'm going to follow Dave Ramsey's advice. I'm going to sell the vehicle. I'm going to get rid of this thing because this is a horrible loan. You could just surrender it through the bankruptcy, and we can surrender it back to the lender. Sometimes they'll allow you to just even go drop it off, and then the debt associated with that vehicle is discharged through the Chapter 7. So the debt goes away completely. You give the vehicle back, and you can start over. One thing that people are often surprised is you can get new vehicle loans if you need it fairly easily. Even right as a Chapter 7 is ending, the interest rates aren't great, but you're going to get into a loan that's even a little bit better probably than you're thinking right now. It is a possibility. You're not going to be riding your bike around kind of thing. You're going to be able to get into a vehicle if you need to, but you could surrender that vehicle through the Chapter 7. When you're in a Chapter 7 bankruptcy, there's really three options. One is just to what's called reaffirm, keep the loan as it is, keep making the payments and just pay it off. You can redeem it, where you pay the value instead of the amount owed. Or three, you can surrender it through the bankruptcy process. The debt will be discharged, and then you can just try to get a different vehicle later on. That's what a Chapter 7 can do for you, particularly if you're finding yourself with one of these really inflated loans from last year and you're in Arizona. Come talk to me about this, and we can work out something that'll make it much more affordable to keep you in that vehicle or to help you get into something new that's a lot more affordable. Now, let's talk about Chapter 13 as it relates to vehicle loans. Normally, in a Chapter 13 process, you just pay off your vehicle and through the plan, you get your title, and it's just great. Because if you recall, if you've watched some of the other videos on my channel, Chapter 13 is a much longer process. Chapter 7 takes about 4 months. Chapter 13 takes up to 5 years. And so you're going to be able to pay that vehicle off during that time. However, Chapter 13 has kind of a cool tool. It's called a cram down. If you bought the vehicle at least 2.5 years ago, then what we can do is we can come in and we can do something very similar to the redemption in a Chapter 7 process, where we can cram down the amount that you're going to pay on that vehicle down to the value. So we'll use our same vehicle example. You have a $50,000 loan. It's only worth $28,000. And caveat here, the little asterisk, it had to have been purchased more than 2.5 years ago. If you've done that, then we can cram it down. You can pay back the $28,000 rather than the $50,000 that is owed on the loan. Not only that, there are times when we can actually reduce the interest rate down to something much lower. My little asterisk on this one is because inflation has been so crazy, this is not, because it's tied to prime, the prime interest rate, and so it's usually prime plus 2 or 3 points. It's something where we call it the till rate. The till rate has not been great with all the inflation that's been going on, but usually we can get you a better deal overall by lowering that balance and then allowing you to pay it out over time. Not only that, at Chapter 13, this is kind of secondary, but a Chapter 13 is really valuable if you are behind on your car loan and need to get caught up, or if your vehicle's even been just recently repossessed. And when I say recently, I mean it was been repossessed in the last 2 or 3 days. We usually can get the vehicle back, put together a plan that'll allow you to get it brought current and be able to move on, keep the vehicle, and get it paid off. If you have issues with vehicle loans, car loans, and car loans are, like I said, right now are a big issue. It's something we can absolutely deal with, whether you're in Chapter 7 or whether you're in Chapter 13. I can help you out. My information's below. I'm a bankruptcy attorney in the state of Arizona. I do free consultations for people who live in Arizona and that I can help. I'm not licensed anywhere else, but I'm happy to meet with you and talk and see if there's something we can do with that car loan, get it under control, and get you back on the road. Thanks for watching today.